Time now for an in-depth look at the market news on this Monday, and for that I'm joined on the line by Dr. Jun-sok, Professor of Economics at the Catholic University of Korea. Professor Young, thank you for making time today.
Happy to be here.
Well, stocks in New York started out weaker last Friday because of the new tensions over Hong Kong, but by the end of the session they'd recovered, apparently on hopes for a coronavirus vaccine. Korean stocks too quite a bit higher today. What's the story in the markets?
Okay, well, last week, the United States market, as you mentioned, it generally had a roller coaster ride of going up and down, but still generally trended upwards. Today, they will not be trading because it's a Memorial Day holiday in the United States. But at least on the American side, the increased tension between U.S. and China does not seem to be affecting the stock market by very much. If we look at interviews of stock traders, some of them believe that this has a potential to disrupt the market, but some of them believe that when United States takes some of the supply chain back from China, it'll be an opportunity for the United States. The U.S. Dow and S&P has recovered about half of the loss from the drop due to the coronavirus in March, but still they're running much lower than they did on February, though NASDAQ is actually almost back to February levels. They're about 95% of the level that they were in February. Now, China and Hong Kong, unlike the United States, they were hit very hard by the U.S.-China conflict, as well as the Hong Kong Chinese national security law, which will limit activities on Hong Kong. Kospi last week, Kosdaq last week, both, again, a roller coaster ride, but generally trended upwards, and they both also went up a bit today. Kosdaq actually has now hit the highest levels of the year. It's about 3.9% above the highest level that we saw on February before the coronavirus. So Kosdaq is doing amazingly well, but Kospi is still about 12% below the highs we saw in February before the coronavirus.
Right. Well, the Bank of Korea, their Monetary Policy Board, will have a new lineup when it meets this Thursday. The big question is whether they'll decide to take interest rates even closer to zero. What do you think, Professor Young?
Okay, well, if you look at the market analysts, they're almost split in half. Half believe that there will be a 0.25% cut, and half believe that there will not be one. My personal opinion is that there will not be a rate cut, at least this time around. It's hard to see how much of a good 0.25 cut will do. If we look at the 0.25 cuts that were in the past 3 or 4 years, it really didn't do that much good for the economy. But as I said, half of the analysts believe that 0.25% cut will be effective this time because, well, we're just getting out of the social distancing, going into everyday distancing where everybody is starting to spend a lot more money, and they have gotten emergency relief payment from the government. So hitting them with a 0.25 cut, they believe will be effective. As I mentioned, I have some doubts because, well, Korea will be hitting the second phase of the coronavirus recession, which will hit export sectors rather than the service sectors as we saw in the beginning of the coronavirus. So once we have this sort of a bright shock effect from getting out of social distancing and people realize that the recession in the second half of the year may be very rough, we might see a reduction in consumption even with 0.25% cut. But BOK may also be worried because, well, BOK as well as international organizations have emphasized that fiscal policy, that is government spending, will be much more effective than rate cuts. But right now, the government as well as the National Assembly seems to be somewhat afraid of taking further increases in government expenditure because, well, Korea's government deficit and government debt is rising very quickly. And BOK may lower the rates just to signal the government that they should keep up the spending. The situation is still serious.
Well, now this week, alongside that meeting, there'll also be a new forecast of Korea's economic growth rate for this year. Some still holding out hope for positive growth. Tell us about that or anything else coming up.
Okay, well, I think Korea will be very lucky if we have a positive growth rate this year. But government, well, they tend to err on the optimistic side. They still make realistic projections, but on the optimistic side. So like KDI, I think the Bank of Korea will make a positive growth prediction, but probably below 0.5%. Another important statistical information that's coming up this week for Korea is April Industries Activities Trend Report, as well as the Business Sentiment Index. That'll give an idea of how the businesses are doing and how businesses believe things will go on. And then on the foreign statistics side, we have U.S. consumer confidence figures, which are coming out, and the revised first quarter GDP figures for the United States. The preliminary numbers were 4.8% annualized decline in GDP, minus 4.8%. That's annualized figures, so quarter to quarter it's about minus 1.2%. But they did not have time to incorporate some of the latest March numbers, and the latest March numbers were probably going to be worse than early March or February numbers. So I'm expecting the U.S. GDP projections for first quarter to be revised downwards.
All right, Professor Yang, we'll be watching for all of that. We'll have to leave it there for today, though. Thanks so much for sharing your insights.
Thank you.